Hey guys, I'm back. This is Ron with Liquidity Cartel, and today I want to go over a couple trades. I took 4 trades on NQ today, and I thought it was an opportune moment to show how duplicatable this system is, how liquidity sweeps, and how what we do in Liquidity Cartel is a very, very basic system. There's no magic or smoke and mirrors. It is pure auction market theory and the ability to read order flow. That sounds super simple, and it is very, very basic, but you've got to learn a few things first. So I wanted to jump in and talk to you a little bit about each one of these trades having different nuances, but each one of them have the exact same rules. There's only 4 steps in our system. That's all you'll ever need, whether it's a continuation trade or reversal. So I'm not going to go really in depth on what we do in our system. It will take a long time, but the steps are super simple. You know, we see here on the page in front of us here, this market opened up at 9:30 this morning. We had a big liquidity void down here from the market previous the open. Market immediately displaced downward, went down, ran to the Asia low, into 1800. We took no trades out of the open this morning. What you're looking at here on the left side is a 1-minute chart. The right is the 15-second chart of the exact same thing. So I told the group this morning, a lot of times people get jumpy and they want to get in markets too soon. They jump down to the 15-second, which is a very valid chart. I've used it for years. But the market being fractal in nature, it's going to show you the exact same footprint on a 1-minute. On a larger fractal scale, if you were trading a longer term, it'll show you the same on a 5-minute, a 15-minute, a 1-hour, and a 4-hour. And I know I get a lot of people's britches burned on this one when I tell them that the market's not magical, it's not hard to read. There's just certain times it's muddier and more difficult. That's why I trade the market open. Trade the half hour before, trade the first 90 minutes after, and I'm done. If I haven't hit my goals for the day, I live to fight another day. I trade times where there's lots of volatility, lots of volume, and high probability setups. I happen to trade the New York market, because where I live in the world. Some folks, I know good friends that trade London market the exact same way. You know, I believe ICT called them the kill zones. Asia has one as well. Sometimes it's effective, sometimes not as much. But this morning we traded the New York market. As we opened here, and I did put some clues in here of what we trade. We want to see the market immediately run and take a liquidity sweep here down. Touch the 1800 in Asia low. Immediately saw, you can see on the 15-second chart here, lots of buyers got trapped here. People jump on board, think this market's going to scream right back up and rip back through these highs. Market clearly came up and showed us here. It had an inability to break through the opening that started the move down. Showed us multiple times, as a matter of fact, for nearly 3 minutes. As part of our system, this is nothing more than the market showing that the buyers have absolute inability to combat the sellers. The sellers turned around, gave us an opportunity to enter, took a short down. First target here was the liquidity created at 1800. We took a runner all the way down to a high time frame math for 161 points. Point being here is patience pays. All those people that were getting here as this market was coming up thinking it was going down, they got their faces ripped off by the buyers who were trying to retake this top. All those that jumped on board thinking this was going to be a breakout and a V reversal to go higher, got their faces ripped off at the top. Be patient, let the market show you what it's going to do first before you put any of your capital to work. You know, risk 2 here, this is a residual. Risk 1, again, 1-minute and 15-second chart. Market turned around at a high point of interest here, high time frame liquidity. Came back. Lots of players did the exact same thing, thinking this is the bottom of the market. They jumped back in here. The market clearly here is not giving us any intention that it wants to move away here permanently. What it did do, however, is these buyers came back and balanced to this price leg here. Came back into an area of supply and demand. You can see it on the 1-minute. You can very clearly see it on the 15-second. And again, the exact same scenario was trade 1. Market clearly showed it had no ability to punch through this 1800 in this liquidity zone. Gave us nearly 2.5 minutes to make a decision. As this market failed down, we waited for one more level of confirmation, came back up here, showed us again the value has truly migrated, gave us an opportunity to enter. We took a short all the way down here, 50% of the liquidity void created on the market open. Exact same setup. Different place of the price leg, exactly the same setup. Last 2 we took here, I haven't marked these out in price pathways. These were simple retracements back into an area to balance the price leg before continuing to a high probability target. This red line is the low that was made on the previous Friday of a high external liquidity point. It was the highest draw on liquidity in the marketplace. When we see price already migrating down in one direction, the probability, and there's a pearl here for you, if you have a high pull, specifically external liquidity, This market is not going to arbitrarily stop and go the other direction. There just isn't enough orders there. There's not enough confidence at the bottom for these buyers to step in and say, we're done. Business has been transacted. but you got to let the market show you. That's part and parcel of what I wanted to show today for the continuation trades. As we came down here, again, lots of people thinking, okay, we got to the end of the liquidity void. This market's going to move back up here. Buyers jumped in here. You can clear on the side over here. You can clearly see that there was inability for this market to retake anything. It displaced up, gave us a short period of time here to determine if this market going to go any higher. What it did do is it came from here to here to a premium of that leg. Always want to buy if you're continually buying on the downside. You want to buy in a premium. Conversely, if we were to be going up, you want that market to retrace into a discount leg before you get in there. Saves you a few points or it'll make you a few more bucks. We entered again as the market showed us that there was failures to continue higher and value migration was continuing to our target. We entered short here again for another 72 points. We exited the first here at the point of control of the session volume profile. We missed a few points down the bottom side, which is fine. Market slowed down, turned around, buyers tried again to come back and reclaim, shied off this external liquidity point, came back up again, guys. This is the exact same scenario on the fourth time. We wait for it to sweep something. We sit on our hands. We let the market show us how far it's willing to come back up. Specifically, we want to see it coming to a premium here. And then also show us that there is not enough buying pressure to continue to move this price up, and sellers, yes, are in control of the marketplace moving down. You don't need bookmap, deep charts. You don't need level 2 Bloomberg. Let the market show you. And when the market clearly showed us again this short here, it did the exact same thing here. This is an indicator here that I saw this market was slowing down, come up. We did not enter here because it did not enter into 50% premium for us to get in here. We waited. Market did come up to the small S&D, came into a premium of the leg, showed us again clearly as it moved away, came back one more time. What this movement was showing that the value was migrating lower, and it truly did have an intent to move back to this liquidity point. We entered it again, came in through for our take profit at external liquidity point from Friday for another 56 points. These were clean and easy moves, guys. There's no indicators involved. There's no Bollinger Band. There's no fancy algorithm here. This is simply the market showing you that the strongest draw on liquidity that it had when it opened up this morning was where the market was going. Now, we're not predicting the marketplace, but there's a saying, and I used to see this in the financial world, the disclaimer that past performance does not indicate future results. I'll argue that all the time. It may not indicate future results, but it surely looks familiar. The markets go to the same liquidity points on a daily basis. The markets move themselves to areas where the buyers and sellers are going to decide, am I willing to continually pay lower prices here, or am I going to move the market up? And there's very clear indicators that we teach in Liquidity Cartel, how to determine whether or not this market has the energy determination to move back up in reverse, or is it simply going to rebalance a leg and continue down? You know, trade 1, this trade 4 here is a good example of context and structure. Lots of folks got involved here in longs and got their faces ripped off. Lots of folks got involved longs here and got their faces ripped off. The folks that sat and waited and said, let the market show me what it's going to do, and having a greater narrative here, understanding that before the market opened, we looked at it and said, there is a very large liquidity pool down here that we had not been able to punch through. We dusted it on Friday, but prior to that, it had been 47 days since we touched it. This very strong draw on liquidity and the narrative that we formed prior to the market opening was what gave us the confidence that if we saw value migrating lower, all we did is use our tools to participate in the downward move. I think we ended up with 337 net NQ points and 100% win rate today. Not every day is going to be like that in win rate, guys, but again, if you have your system and you're executing on the system, specifically a very easy system, something that doesn't rely on ambiguous indicators that sometimes work or sometimes don't, liquidity will always be king. The market auction theory has been around. Like I said, Wyckoff wrote a great book on it in, I think, 1922 or 1923. Many very successful traders that I've followed for a long time, and I've integrated into the book that we wrote with Liquidity Cartel Doctrine. The markets aren't difficult. We make them difficult because we look at the wrong things. We try to find the next shiny penny. We try to find the next shiny indicator. The next person that tells me I have a specific system. There's no system here, guys. I didn't develop anything. I just put together in our book, and I put together in our Discord, how you can step-by-step identify the areas where the market is most likely to either continue or it's going to reverse. We have 2 setups in Liquidity Cartel. That's it. We don't go outside of those setups. We don't go outside of the 4 steps that create the setups. So if you want to see the exact thing of how we do, liquiditycartel.com, it's going to be a link in the bio below. If you have any interest on this, just a read up on it. We just released our book as well, Liquidity Cartel Doctrine. I'll put a link on that below in the website. But again, in closing, guys, the market's not magic. It's not difficult to read. It does take time. It takes some discipline to look at a lot of trades, but once you do it, it's very simplistic. It's something that you can make a very good Sharpe ratio, very good equity curve over a long period of time. Put this together with proper risk management and trade management, and you can see these results for yourself. So, till next time, guys, have a good day, and we'll talk to you soon.